Hey, welcome to this edition of Reestablishment Podcast. I'm your host, Bodie D'Andrea, coming to you from the beautiful CTN studios in the Tampa Bay, Florida area. Today, I want to talk about an interesting subject with you, and that is, what are you doing with your money? What are your strategies? What is the future hold for you, no matter what the rest of the world does or what happens in the economy? How are you protecting yourself? You know, these are things that we have to think about. A lot of people like to hide their head in the sand, and we know what that does. There's nothing good that comes out of that. Giving and receiving or investing, planting, sowing, however you approach it, is a universal concept, much like gravity. And the earth was designed by God to have this principle in place. You know, think about some of the meanest, most evil, rich people that you know. If you'll look, almost everyone is a giver. And that's kind of a weird thing to say, but they are, either because they have so much money they don't know what to do with it, or they carefully invest their money in different nonprofits or different things. And so even a nasty farmer that puts seed in the ground can still harvest a crop. What we believe is there's a better way than just doing that. And that is to do it purposefully and do it with a good heart and to do it with the right heart. So today I've got a great guest. We've talked on the phone several times, and he has a program on CTN. And so today I'm happy to have Wayne Maslyk with us. Wayne, welcome aboard. How you doing?
Oh, very good. Thanks for having me.
Good. I was telling Wayne before we started that before I started my search for a financial planner, that I treated it like I was interviewing people for a job, that I wanted to hire them to help me, much like I would hire a CFO or an accountant. And, over a period of actually several years, I interviewed several people before I found the ones that I thought I could communicate with well and that I would trust. That trust has to be there. And so, doing what you do, tell us about, number one, finding the right client and how you build a relationship.
Yeah, and the way you took your approach to try and find your advisor or advisor team, one thing folks have to keep in mind is there's many people that call themselves financial advisors. I mean, there's insurance agents, there's brokers, there's stock jocks, there's certified financial planners, there's bank investment people, sitting at the desk when you go do your banking.
Right.
So there's many types of people that are in the advice business to help people do something with their money. So the folks out there listening or watching, need to figure out who they're looking for to help give them advice. They're looking for financial planning advice, retirement planning advice, tax planning advice, estate planning, estate succession advice, insurance planning advice. All those facets of planning do come into play when you're setting up your own financial house.
Not only them, but their staff.
Their staff is so
How
important.
critical.
I mean, when you call, the advisor's not going to answer the phone in most cases. It's going to be their receptionist or their staff. Are they pleasant? Do they treat you with respect? Do they treat you like you're not wasting their time? If you say you have to call back again or again and again, do they get irritated with you? Are they happy to serve you?
I got to say, your staff is good. I forgot her name, but she is so sweet.
I have a few. Kristen, Alicia.
Yes. Yeah, absolutely sweet. And when you first call, really, really makes you feel comfortable that you can converse with them and they feel like, yes, I can take care of you and help you out.
And the first thing they say is the company, right? And who they are and how can we serve you today.
Yep.
Every call.
And every time I've tried to get through to you, they've been wonderful.
Great.
Let's talk first about tax planning, because that's one of the ones that you mentioned. And I think a lot of people get nervous during tax season, or maybe even mid-year or late year, worried about, well, can I take this as a deduction? What do I do about this? How do I prepare next year? What records should I keep? Talk to us about some of those areas in the tax planning.
Well, a few key things, this time of the year, April, May of tax season or just after tax season, is, to look at, for one, the bracket you're in. Or what effective bracket are you in? There's a tax bracket you hit, right? If your income got over a certain level, the rest of the income now is going to be taxed at that rate. But then there's an effective tax rate. That's based on the taxable income you have combined. As you go through all the tax levels from the little, smallest to the one you're at, you pay an effective rate. And just know that rate. So when you have extra income, or maybe you take money out of an IRA, that's the tax rate you're going to pay on that withdrawal. But then you have to also look, like say you're a retiree on Social Security. You have to look at the Social Security you're earning, gross amount,
right,
and how much is in that taxable column. Are you paying tax on your Social Security? And if you are, at what rate? In other words, how much of that Social Security is included in your taxable income? It could be as high as 85%. So if you're not at 85 and you have extra income this coming year, you're going to cost more of your Social Security.
Wow, good point.
So that's another issue. The year-end thing that you brought up earlier about taxes, yes, like you really don't want to be surprised at where you are tax-wise right now. Say you're a small business or maybe you have rentals or whatever. You should kind of know where you're at before your taxes are even completed. Right. End of December, mid-December, you should know where you're at. It shouldn't be a surprise this time. So if it is, you really need to get with your CPA and your financial planner, make sure they're communicating with each other, and see if there's things you can do before year end. Right now, it's too late.
Now, you get with your folks at least once a year, look at rebalancing or maybe making a change in risk assessment at a minimum.
Minimum.
Yep.
Yeah, minimum. Rebalancing, that's kind of an individual thing, depending on the advisor and the people. Rebalancing a portfolio is, if your more aggressive equities are high right now, right, take some out of there and put them in the underperforming bonds right now. Some people don't want to do that. They want to keep riding that high. Another form of rebalancing is, most folks don't have just all risk money, everything in the market, stocks and right. Some people like safety, CDs, fixed annuities, index annuities, government bonds. They don't want all their money in something risky. So you want to look, throughout the years and see if you want to get any off the table. Take some out of the markets, out of the risk, and get them in some safe things, especially since safe rates are higher right now.
Right.
Higher they've been in 20, 25 years.
Talk about the RCDs that we were talking about before.
Yeah, QCDs.
The QCDs. Mm-hmm. Yeah, talk about that.
So a QCD is a qualified charitable distribution. And what it allows is if someone is 70.5 or over and they have money in qualified accounts like an IRA, traditional, that's never been taxed, and they like to give to their church, say tithing regularly or other nonprofits or both, there's a tax, I shouldn't say a loophole or anything, but the IRS tax code allows those people to pull directly from the IRA and send the money up to the amount their RMD, required minimum distribution, would be. Up to that amount, they can send all of it or a portion up to that to the church or charity, and no tax. So many folks can't itemize anymore because the standard deduction, you're getting over 30-some thousand for most couples married filing jointly to be able to itemize anything.
So say that again, because people may be listening that they moved it even before 73. It's 70.5.
So
you can start doing that, right?
Yeah, the required minimum distribution age today, 2024, is 73, age 73. The year in which you turn 73, you need to start taking the minimum distributions out of your qualified money. You got tax deductions all those years for putting the money in your 401ks.
Right.
Now is this time to start paying. And the government has a table. It's a percentage of the IRA. Say, it's in the threes. Once you're 73, it's in the mid to high threes. It's just rounded up to 4 for today's conversation. You have $100,000 in IRA, you have to pull $4,000 out, right? Mandatory. Or there's penalties, right? They want you to start paying the tax. Don't have to spend the money. You put it right back in your bank if you want to pay the tax on it. But if you're a giver and a tither and you're over the age of 70.5, not 73, 70.5, they use the old minimum distribution age. A lot of people miss that and don't know that.
See, that's a great point.
Yeah, you can be 71. Hey, I don't have to take out my minimum distributions. No, but you can still do a qualified charitable distribution. IRA right to the church. and no tax. And you don't have to itemize to get the tax benefit because you'll get your standard deductions plus no tax on that gift to the church.
Yeah, it's an extra bonus.
If you don't do that, you're paying tax on that.
And this is why people need to call you.
Yeah.
Because of things just like this. Let's talk to a person maybe that has lived paycheck to paycheck for a while, or maybe many years, maybe raising a family, maybe one income family, and now they're looking and saying, I let those years go by, and now I need to do something. Mm-hmm. What would you recommend first steps for somebody that needs to start planning?
So it's a very tough question and a broad question. I would say, the key, of course, is no debt, right? You got to keep your debt down. So that, right. But one of the ways to try and have no debt, or at least to start going the other way with debt, is you need a savings account. You need a cushion to be able to go to when the car breaks down, the refrigerator dies, you need a new roof. I mean, if you don't have that cash sitting at the bank, you have no choice but to swipe it on a credit card, finance it with a contractor, put it on your home equity line, at 8-9% nowadays. Right. And it's hard to get out of that.
It doesn't make sense.
You have to have a savings. You have to. That's number one. Have at least a few thousand. More's better. So if something comes up, you have a place to go where you're not charging it, or you're not paying interest, or you're not going to your IRAs and going to pay tax on the withdrawal. So now if you need $4,000, we got to pull out $6,000 to pay for the taxes. So you need cash. You need some cash in the bank. I guess that would be my number one suggestion.
Yeah, so I've heard it said before, if you could pay all your bills on 20%, give God 10%, and then pay yourself 10%, to kind of do that, to build that cash value up.
It's the hardest thing to do for some people.
It is. It's very hard. Yep, it is. I remember, I didn't plan on mentioning this, but I remember there was a time in my life when I had no disposable income whatsoever, to the point where it even made me hard. I knew I had to tithe, but I just didn't have the money to pay all the bills. And so what I did was I started little by tithing my time, and I would clean the church once a week for Sunday morning service. And I would give God my time until I was able to get rid of some debt and work it out and start paying tithe. But it's so important that, number one, that we save, and number two, we learn the principle of giving, because that is so important.
If I could add to those two,
yeah.
If there's no money left and you're trying to live you're not being, I want to say stupid, but you're not being loose with your money. You're being responsible, and there's just no money. You got to go find the money. You got to go work.
Right.
You got to do something.
Right.
You work the extra job or two, or do whatever, sell things. That's the only way to start getting that money in the bank. If you don't have a savings, you have to have, either if you can't cut expenses, then you have to make more money. Ideally, you do both. You cut your expenses and try and go make more money somewhere.
Right.
You have to do it, or the cash just will never accumulate.
Right, and you'll never overcome that.
Correct.
One more thing I'd like to ask you about, and this is something I get questioned on, and that is, no matter what realm you're looking at, whether it's a bank card, whether it's stock market, whether it's bonds, whatever, how does a person dissect and really understand the fee system? Because there's so many different fee systems, whether it be from a broker, the clearinghouse, all the different places. How does a person learn about the fees? And because a lot of times that can make a difference on how or with who they invest.
Yeah, I'll start with kind of the other end of the fees. And this is the one fee you don't want to pay, and that's a late fee.
Exactly.
Okay? Right, or an ATM fee.
Right.
With $20 and pay $3. That's the worst fee.
Right.
People talk about some in my business. I'm going to charge 1% to manage a portfolio, right? The bank's charging, 10 to get my own money out of the bank. That
right.
should be, that's kind of highway robbery. That always upset me. But especially your credit card bills, your car payments, don't pay them late. I mean, that's the worst fee. So you got to get rid of those fees. As far as annual credit cards, I have an American Express Platinum card, right? And there's a fee. There's a fee of whatever it is a year, $500-600, but that fee gives you certain benefits, right? But whatever the benefits are, you got to weigh those against the fee you're paying and then make a choice. Same with any other credit card. Some credit cards will break down your annual expenses, right? If you charge, and you pay off every month, we don't want to carry over a charge balance, right?
Right.
But many people either get cash back or for miles will charge their stuff and then pay it off every month. Well, at the end of the year, these credit card companies have an annual report that you can print. And some are excellent, detailed, very detailed summary. This much on groceries, this much on travel, this much on auto. So it might be worth the $100 credit card fee if you get that with it. With advisors, so there's different fees. If you're going to be in a managed portfolio that I manage for you, I use all no-load mutual funds, right? I'm not an individual stock guy. I'm not a good individual stock picker. I'm a good mutual fund manager picker, right? A good manager and their team from different companies put together in a portfolio. To me, that's the best way to get just quality managed money.
And it's more diverse.
Way more diverse. Many teams with many different portfolios. So that there's going to be my fee, right? And generally that's 1% to 1.5%, depending on how much assets a client has with me. So that's to me, that's my company. So I pay my girls that are so nice, right? It funnels down, and whatever is left at the end of the year, I get to keep. Then in those mutual funds, there are individual fees from those mutual fund managers, and they're disclosed. And the funds that I use, the no-load funds, there's no front-end load, back-end load. Right. And it's common. I'm not the only one that does this. I have fees as little as like 20 basis points, right? Like 1/5 of 1%. Right. Very small. Add that to my fee, you're paying 1.2, the whole thing. Some are more. Some can be 1.25, on top of my 1. So that's 2.25 that you're paying. But then you got to look, what are you getting for it? How is that team managing? Like if you're in a large cap growth fund, you want to be in, if there's 800 of them available out there, you want to be, in the cream of the crop, top 10 or 20% of those growth funds.
Right.
So if you're paying a fee and you're in that top 10 or 20% for 1, 3, 5, 10 years, I say you're getting your money's worth, right? If you're paying the same fee and your fund is in the bottom 80%, right, it doesn't matter if the fee's half the price, you're not getting a quality fund. So you really got to dissect that. And I help, we can do kind of a fee analysis on folks' portfolios. But you have to look at fees. You're right.
Yeah. I get a lot of those questions where people ask me, do you know? I go, look, go talk to a fiduciary. Yeah. Go talk to a person that's an expert in this area. Wayne, we've talked about some good things today. Mm-hmm. Don't want to overload everybody. But a lot of common sense things, from just ATM fees all the way up to really having a good managed account, a portfolio, one that you can be comfortable with and one that you can tolerate and live with. And, God expects us to use our mind. He expects us to be good with the talents that he's given us and the abilities, and to find somebody like you that are willing to help. That's why we wanted you on. The whole purpose of this podcast is reestablishment, and that's to bring back the basics of life and to get people a good, firm foundation and a footing. So I thank you today for being with us today. I want to tell people, listen, today'sretirees.com. Again, today'sretirees.com. Get a hold of Wade. Get a hold of his folks. He's there for you. He's great at answering questions. He will give you the no spin on it and tell you exactly like it is. But this is something that I think a lot of people struggle with, where they're just starting out, or maybe they've had a big setback, or maybe they've had some growth and they want to know what to do with it. And finally, what are you going to leave those behind you? And how does that go for your loved ones when you pass on? So these are all different issues and items, and today'sretirees.com, that's the place you want to go. You'll get good advice, you'll get good godly advice, and you will benefit from it. Thank you today for listening. See us next time on Reestablishment.
Raise your hands up. Raise it up. Reestablishment. We've not yet complete. Let's talk about it from A to Z.
Igata.Solutions is your everything internet company. From website design to hosting, email service, security, and e-commerce. Igata.Solutions does it all. Every business is unique and every client has different goals. Let us help you achieve them and grow your business with us. Igata.Solutions, your everything internet company.